This is Nasar, aka the real estate Doru. I'm not your guru, I'm your Doru because I actually do this business. Today I have Natalie Kalaji over here to my right from HoloTax.com. She's what you call a tax strategist, and she's actually my tax strategist as well. On my Instagram, I always get the questions, how much do wholesalers pay in tax? How much should I put aside if I do my first wholesale deal for tax? And of course, do wholesalers have to pay tax? Which, yes, everyone who makes money in America has to pay tax. If you're making money in America, you have to pay tax. There's no way around that. The amount of you pay is going to vary per person. But since it's not my area of expertise to talk about the taxes, I actually hire someone. Now I actually hire Natalie over here to my right, and she's going to answer the question, how much do wholesalers pay in tax?
Thanks, Nasar. So when it comes to wholesaling, what people need to realize is you've got an ordinary business. So the IRS, this is the same as if you were selling tables you built, selling plants you potted, you're just buying and selling contracts. So the fact that it's a house doesn't change anything. So what you want to keep in mind is a few things. The first thing is that everyone's going to pay a different tax rate. So if you make $30,000 a year, your bracket for taxes, how much you pay, the rate is lower than someone who makes $300,000 a year. So for starters, I can't tell you a flat answer of, 10%. Like, that doesn't exist. It's going to, right? It would be great if it was 10%. It's going to depend on you and how much you're earning at your W-2 job, if you've got a spouse, all of those things. So that's the first thing to think about. The next thing is that your wholesale income is going to be subject to self-employment taxes. So what those are, if you work a regular job, when you got your first paycheck, you looked at it and half of it was gone. They took out that FICA, that Medicare, Social Security. It's all taken out of there. It gets worse when you're self-employed. You're both the employer and the employee. Normally, your employer's paying half of that for you, and you as the employee are paying half. When you're self-employed, you pay both halves, and that is self-employment tax, and that is about 15.3%. So that's the same for everybody. So keep that in mind. Not only are you going to pay tax to the federal government for just your income tax, your earnings on it, you're going to pay that extra self-employment tax of 15.5%. And if you're in a state with income tax, you're going to pay them their income tax rate as well. And again, those are going to vary. So I was just going to run through a quick example here, of an average wholesale deal and how it can pan out. Say you've got your deal, you knocked it out of the park, you're probably double closing this, you're making $50,000, you don't want anyone to know. So you got your $50,000 gross income, that's right off the bat. But you spent some money getting that deal, right? You bought some advertising, you did some cold calling, you hired a marketing firm, you've spent 10 grand. So at the end of the year, $40,000 is your net profit sitting in the bank. So the first thing we need to look at is this year we had a new deduction. So this is going to help you, but it kind of switches up the calculation a little bit. So like I said, the first thing you got to think about is you're going to be paying this self-employment tax, this 15.5%. So on your $40,000, that's about $6,000. So that's a pretty big chunk of change right off the bat.
Okay.
So after we take that out, the government gave us this new deduction. This is new for 2018. If your accountant didn't mention it, bring it up. It's important. Most people get this. It's called a 199A deduction. Basically just gives you 20% off of any self-employed income.
Okay.
But it's after self-employment tax. Like, that calculation happens first, then they let you apply this because they don't want it to be too good. So you've paid your $6,000, you've got that amount of tax. Out of your 44, they let you take this deduction. So instead of paying, like we said, your federal income tax, your state income tax on this whole 44, you're only paying it on 35. So they let us knock 20% off of that.
All right.
So what it comes down to is you're going to have two amounts of tax. Your self-employment taxes, which are going to be that, like I said, 15.3%, the $6,000. And then on this amount, based on your bracket, based on the amount of income you earn, you're going to pay the federal government their share, and then your state, if you have state taxes, their share. So if you're in the 15% bracket, that's about another $5,000. So if you made a $50,000 deal for the year and had some expenses, if you have $40,000 of income, you're looking at around $11,000 in tax.
All right, so $11,000 in tax. Now, this is for the person who does the wholesale deal in their own name, correct?
Correct. This is no entity, no corpse, no nothing. You just closed a deal in your name because you don't want to just sit around and not do anything. You got your first deal.
You was watching this channel, hopefully, and you took action.
Yep.
You didn't worry about the things that didn't matter. You just went out there and did it. All right, so this is for a person that they did a deal in their own name, which I did my first deal in my own name, I believe. No, I had an entity that I brought from another state down here. But typically people do their first deal in their own name, and then you let your business fund your business. That's what I recommend. Now, could you give us an example if we were to do this in an entity like an LLC or something?
Yeah, so if you have just a single member LLC, you hear this all the time. I'm sure you get asked this question. Yes. Do I need an LLC to get tax benefits?
All the time.
It doesn't give you anything. It does nothing for you.
Oh, okay.
An LLC by itself, if you just set up an LLC, the one benefit you'll get is deducting the cost of setting up the LLC. You get that $200 back, but that's it. So just an LLC doesn't change anything tax-wise. Good and bad. Doesn't save you any money, but it doesn't give you any new responsibilities, no new forms. Gives you a level of protection, a business name, sets it separate.
Now, what if I did an LLC, but it was structured as an S Corp?
So an LLC as an S Corp will give you some tax benefits.
Okay.
And I can run through an example on that.
Please.
So that's going to change things up a bit. So a little bit about an S Corp, which is what Nasar mentioned.
Yes.
So an S Corporation is actually an add-on to an LLC. Okay. This is important for people to realize. So the way I explain this is an LLC is like going and buying a Mustang. You bought a Mustang, you have a Mustang. But you can add features to it, right? Maybe you want a Shelby Mustang, you want a Cobra. You add that that's an add-on to your Mustang, right? It's not its own thing. The LLC is your Mustang, your S Corp is your Shelby package. So we're adding on a feature with the IRS. So what that means is I strongly recommend wholesalers start off with an LLC doing their deals in there.
Yes.
Because if you ever need the S Corp, if we're to a point where it makes sense, we can add it at any point. So it's one of those better to not need it and have it than need it and not have it things. Of course. So a couple things would change if we had an S Corp. The reason an S Corp saves you money is we talked about this self-employment tax here, this $6,000.
Yes.
So with an S Corp, the IRS basically said, if you pay yourself a salary, and on that salary, you're paying those taxes, your FICA, Medicare. On the rest of your income, you don't pay that.
Yes.
So at $50,000, I wouldn't say to get an S Corp. It's going to cost you more money than it's going to save you. So with the S Corp, you have a separate corporate tax return you're now paying for. You're going to have payroll. You're going to have bookkeeping. On this amount of money, there's a good chance it's going to cost you more to maintain it than what it's going to save you. I normally tell people when your net income after expenses is around 50 to 70, talk to your accountant about an S Corp.
Okay.
So what that's going to do is going to shift this up kind of a little bit here. So this $6,000 goes away.
Yes.
Right? No self-employment tax. So we'll use this example. We wouldn't normally do it this low, but just to keep the numbers the same, right? So you had $40,000. Let's say we figure out a reasonable salary for the work you did is half of that. So you take $20,000 as a salary. On this, you're paying that 15.5% self-employment tax. But on your remaining $20,000, you're not. So now if we came over here, your payroll taxes, your self-employment tax drops from $6,000 down to $3,000, and we're under $9,000 for your taxes.
Wow.
So the bigger this number gets, and the more of a spread we can create, the more that savings increases.
All right. So, I mean, she broke it down for you, and I wanted to bring her on here because I get asked these questions. I get asked these questions a lot, and when I get asked these questions, I tell people at disclosure, hey, I'm not an attorney, I'm not a CPA, I'm not a tax strategist, I'm not any of that. When I answer these questions, it might not flow as it flows what she did because she's the actual tax strategist. And if you want to get in touch with her, you go to colotax.com. We're going to put the link right here in the video. And you can set up a meeting with her, a consultation. And how long are your consultations?
They're 20 or 30 minutes.
30-minute consultation. She has blogs on there. She's also on Bigger Pockets. She's active on Bigger Pockets. So how do they find you on Bigger Pockets?
Just by my name. I'm the same name on there, Natalie Colati.
Okay, Natalie Colati.
I'm all over the tax form on there.
All right, well, great. So, yes, until next time, make sure you subscribe, comment below. And until next time, I wish you much success in your life and your business. Peace.